Welcome back to 7-Minute Options. Today I'm going to be opening a new position in Snap, which is of course the parent company of Snapchat. And I was looking through the list of liquid symbols here on Tastyworks, and I was trying to find one that I was comfortable and happy with. There's only about 32 days left before the July expiration, so I usually try to open positions in the 40 days to 45 days to expiration range, so this is cutting it close for me. And there aren't a lot of opportunities right now. IV is just not high across the board. But I did find this position, and I'm going to be opening a strangle. So if I look at Snap, a couple of things here with Snap. It's been going sideways mainly since about February. It's been just basically bouncing up and down. And I don't anticipate a lot of movement before earnings on July 20th. Of course, that earnings announcement is after the July expiration, so that should not impact the time premium or the volatility crush I expect between now and 32 days from now. Because usually, I mean, if the earnings would be within the cycle, then IV wouldn't collapse like it usually does. It would just stay high. But it's after the July expiration, so it shouldn't affect this trade. And actually, it does affect it in a positive way, which means stocks typically don't bounce around a whole lot before earnings. They tend to go sideways as people just kind of quiet down and wait for that big binary event, which is the earnings announcement. So I'm hoping that Snap is just going to continue moving up and down and dancing sideways. And so I'm going to do something I usually don't do, which is buy a strangle or sell a strangle, because typically I only do this in ETFs or really big stocks, because I don't want to just end up, if this thing starts running away from me, then I could be in a really painful position. And so usually what I do is I leave the naked put naked, and then I usually buy a call spread on the upside just so that I cap my risk on the upside and it's not going to run away from me like the way, for example, AMC or GME or any one of these meme stocks can run away. The other reason why I feel safe doing this, not just because we got earnings coming up and I think it's going to go sideways, but also because Snap is a big company, right? Like if I look at Google Finance on my other monitor here, we got a market cap of $96 billion, right? So this isn't something that's just going to double to 200 or 300 billion overnight. So I really don't think I'm going to see big movements here. Why did I pick the 55.75? Because they're outside the expected range. So you can see the expected range here between now and expiration is plus or minus 5 points. Right now we're at 63, so that puts us at 63 plus or minus 5 is 58 to 68, and so we're well outside the range here. This is the 15 delta. I like to go to the 20 delta, but I'm perfectly happy with the 15 delta because I can get 136 bucks here, and I don't really want to get challenged on these positions, so I'm happy. If I look at the chart, the 75 makes sense to me because it's all the way up here. The 75 is higher than the most recent high, which was in February. So in February, it peaked at 74 briefly before bouncing back. So I feel pretty comfortable selling the short call at the 75 level. Actually, let me just put that in there right now, just so we can visibly see where it is. And that's at the 75. And on the downside, 55, I mean, that's where I get the money. If I go to the 50, I only got 30 bucks. And then it's like, what's the point of holding all that risk for 30 bucks? I'm okay with getting $72, $73 for this and holding the associated risk with that on the downside. The buying power is $635 that I'm giving up in buying power, and I'm getting a whopping 6 theta for that. I mean, getting like 1 theta for $100 buying power is absolutely fantastic. And again, I don't expect to be challenged on these, or at least, I mean, sure. Maybe they'll get challenged a little bit, but hopefully, at the 15 delta range, typically these are going to expire out of the money, which is what I'm hoping for. And so, yeah, I can pick up $136 for this one. The 55, if I look at it on the graph, let's just put that in where it sees. It is a little bit higher than the most recent low. And again, I don't mind taking risk on the downside. Typically, if I'm going to accept some risk, I'd rather take it on the downside. So yeah, if this thing pulls back to the 54, 53 level, I'll just roll it. Again, this is a naked put, so it's relatively easy to roll into the next monthly expiration. But then again, I got earnings coming up. So if this does become an earnings issue, then what I would do just before earnings is roll it into, like, let's say this gets challenged just before earnings, which could happen. So let's say if I'm at 52 or 53 and I get earnings coming up on July 20th, then I would probably look at rolling the position into the July 30th expiration cycle here, and turning that into an earnings play, where usually I would keep the put naked and I would cap the limit on the upside by turning that into a call spread and buying the call. So that's it. I'm going to put that one on now for 136. Hopefully that's going to sell. Let's see. And yeah, let's see how this goes. All right. Thanks.